All right, so my AR50 trading strategy has been blowing up on Twitter. Everyone is passing their challenges. Everyone is getting these sweet profits, right? They're making money, and it makes me so happy. But the thing is, this month and previous month, it has been really good. The strategy was absolutely fire. We had like 20 setups, and out of those 20 setups, we were able to win around 18 or 17 setups. But it's not gonna happen every single month because this is a strategy that requires daily bias. Don't worry, in this video, I will teach you the exact way that I trade this strategy, from finding my daily bias, from finding the high time frame order flow, and then using this strategy to take my trades. This is going to be the complete guide for you to trade this strategy. You will basically just make money forever with this model. Now, before I start, you need to understand one thing. If the thing that I'm about to say is gonna hurt you, I want you to leave the video and please go watch someone else who sells you a fake dream. You are going to experience losing weeks. You can experience losing months. That is absolutely normal. All right. It's not gonna be like you're gonna be profitable every single month. You can experience a losing month as well. But in the long run, you're going to be insanely profitable because in 1 month, you can make around 30 risk to reward ratio. 30 risk to reward. That is insane. But you can also lose like 3 or 4 RR at some point of your life. Could be January, could be February, doesn't matter. In the long run, it is profitable. So enough with the chit chat, let's get on with the video. So the very first step is that we have to find our daily bias, right? Or we need to find our weekly bias. We need to know where the next weekly candle is going to expand. Where is it gonna go? Or we want to know where the daily candle is gonna expand, right? So first off, I would look at the weekly time frame. So I will try to look and identify where the weekly candle is going to expand. Now, if you haven't watched my weekly power of 3 video with standard projections, standard deviation, it is in my course. Basically, I haven't uploaded it on YouTube, but I'm going to give you a glimpse on how I determine my weekly candle expansion direction. This is one step, but then there's another way, and I'm going to teach you that as well. All right, so just relax, right? Grab your popcorns and take your pen and notebook and watch this carefully because this is gonna change your life. So first off, we mark out the weekly candle opening price, right? So it's gonna be on Monday, right? Whenever the candle opens, it's gonna open at 17 p.m. New York time. So it's gonna be 5 p.m. New York time. Sorry, I'm bad with maths. So it's gonna be 5 p.m. New York time, right? You mark out the opening price of the weekly candle. Now you're waiting for a market structure shift, right? So after the opening price, you have marked out the opening price. Look for a market structure shift. So it's gonna look something like this, right? We have a market structure shift, and over here you can see we have a market structure shift, right? So we want to use our Fibonacci from the last low to last high before market structure shift. All right. Now we want to look for another market structure shift above the -2 of standard deviation projection. So if I go here, you can copy these numbers, right? Now this is going to be our manipulation part. So price will accumulate, then manipulate, and then distribute, right? Accumulation, manipulation, and distribution. ICT power of 3. So we are trying to determine the power of 3 of the weekly candle, if that makes sense. If we can determine the weekly power of 3, we can then exactly know the direction of the weekly candle, if that makes sense. So now when you have marked out the weekly candle opening price, you have to drop down to 15-minute time frame. All right, you have the weekly candle opening price, drop down to 15 minutes time frame, and then look for a most recent market structure shift. So price has to dip below the opening price, right? And then it should give you a market structure shift. All right, it has to go below the opening price, or it has to go above and then give you a market structure shift. I'll get later into that. So over here we have this low and this high. Price goes here, right? And then we simply look for another market structure shift on the 15 minutes time frame. And once you get the market structure shift around this area, so above -2, above -2.5, or above -4, if price keeps going up for that, that is F your shots model. Basically, it means that price will keep on going up for the whole week. All right. So if it breaches the -4 to some degrees, let's say over here, right, then it's best to avoid that power of 3 setup. So now once you get the market structure shift right on the 15 minutes time frame, we can then use our standard deviation projections once again, and we can look to basically just take our trades till, you know, the -4 level is hit for that day. Now price is going to keep on expanding because we had accumulation, then we had manipulation, and now price will keep going down, right? Now price can go even lower, below -4, and it can keep on going lower, lower, lower. Now once we have the direction of the weekly candle, then we can look to do the same tactic with the daily candle. So first of all, we look to identify the weekly candle expansion. So the candle opened here, right? It manipulated, and now it's going to expand. But every single day, it's going to have a power of 3, right? It's going to go up, manipulate, and then distribute. Manipulate, and then distribute. Manipulate, and distribute, if that makes sense. So once you get a market structure shift, that is your confirmation that, okay, price is not going to go lower. So now you have your weekly candle expansion direction, if that makes sense. Now, here is the Asian model, right? So we have to, so the Asian session starts at, what's that? 13, 14, 15, 16, 17, 18, 19. All right, I'm really bad with maths, sorry guys. So 8 p.m. New York time, right? That's when the Asian session starts. Now there's a difference between Asian kill zone and Asian session, right? Remember that. So we have to mark out the high and the low of the Asian session, right? So this is the high, and this is the low. This could be the low. All right. Now, the Asian session ends at 2 a.m. New York time. So it's going to end here. Now, once our direction is set to be bearish, we want to see price break below the Asian low, right? If it does that, all we're looking to do is take our entry from the 0.5 level of the Asian range. Once price closes below the Asian low, right, we can then look to take our entry from the 0.5 level, and we can go for 1 to 2 or 1 to 3. Price only does two things. It accumulates, manipulates, and then distributes, right? Or what it does is accumulates and then expands. It distributes. It doesn't have manipulation. Price will never reverse after consolidation. It can consolidate, but it will never reverse into a new trend. It will consolidate, it will manipulate, and then it will distribute, or it will simply just accumulate, right, and then distribute. Very simple. So we keep milking, we keep taking shots as long as our bias is bearish. Now I'm going to show you another way to find your daily bias or weekly bias, and that is using the external range liquidity and internal range liquidity, right? I could explain this method multiple times on my YouTube channel, but I'm going to explain this again. So this is going to be like a complete package for you guys to use. So price only does two things. Remember that. It moves from external range liquidity into a internal range liquidity, right? So external range liquidity is any high and low. So this is the high, this is the low. These are called external range liquidity, right? And any fair value gap in the discount or premium, or basically any fair value gap, is considered to be internal range liquidity, right? So price only does two things. It goes from external to internal or from internal to external. Now, I highly suggest you only look to go from external to internal, because going from internal to external is a bit complicated, and you need to know about the higher time frame order flow. However, from going from external to internal, you don't need to know about the order flow. So how do I determine my weekly direction? So on the weekly time frame, I'm looking for price to take out any high, right? Any high or external liquidity, if that makes sense. Once price takes out the high, right, on the weekly time frame, I will drop down to 4-hour time frame. Now on the 4-hour time frame, what I'm looking for is a market structure shift. Now, once I have the market structure shift, that alone is going to confirm our bias for the upcoming days, for the whole week. Now, this is not where we want to trade the AR50, all right? We have to mark out the PD array on the 4-hour time frame after market structure shift. And then we have to look for another market structure shift on the 15 minutes time frame. So once price goes into the 4-hour time frame PD array, we want to drop down to 15-minute time frame, and then we have to look for a market structure shift. All right. Now, once you have that market structure, guys, you can basically keep taking short positions using the AR50 trading strategy, right? So as I explained before, you mark out the Asian high and Asian low, right? And basically you just keep taking short positions. You will lose some trades, of course, it can happen, but overall you're going to be trading with the direction of the higher time frame bias, if that makes sense. And you're going to be targeting this weekly fair value gap, that is your internal range liquidity, right? Very simple, guys. This is how you basically frame your weekly direction. Now, to confirm your daily bias, right, all you got to do is simply mark out, you got to do the same thing, right? So let me just do this, sorry. And on the daily time frame, you're marking out external range liquidity, right? And you're identifying the internal range liquidity. Now, once you have done that, all you are simply looking for from here onwards is basically once price takes out the high, drop down to 1-hour time frame. Drop down to 1-hour time frame, look for a market structure shift. Now that alone is going to confirm your bias. Now, for the first entry with AR50, you have to look for another market structure shift on the 5-minute time frame. So once you have the market structure shift on the 1-hour time frame, mark out the PD array in the premium. The price goes into that PD array. Look for another market structure shift on the 5-minute time frame. Now from here onwards, all you're doing is taking basically the AR50 trades. So Asian session starts, price breaks out of the Asian session, you take a short position. Next day starts, right? Asian session breaks, entry on the retest of the 50% level, and you keep on targeting until the internal range liquidity is hit. Now, that's pretty much it for how I find my bias. And for auto flow, if you want to increase the chances even more, come to the charts, right? And within 5 seconds, you will be able to identify the direction of the market. If you cannot identify the direction of the markets within 5 seconds, then your auto flow is not clear. You will be wrecked. So the way I identify auto flow is if I see that price is going up, I should be able to identify that within 5 seconds. If I see that price is consolidating and it's going up and down, I'm getting confused, I'll move on to another pair or asset. So that's pretty much it, guys. And for going longs, let's say that we have Asian range and price breaks out of the Asian range high, right? We simply want to take long position, right? This is the whole rule of the strategy. We have to mark out the Asian session high, Asian session low. If price breaks out of the Asian high, we then use our Fibonacci from the low of the Asian range to the high of the Asian range. and then we're looking for an entry of the 0.5 level of the Asian range. So that is going to be right here, and we go for 1 to 2 or 1 to 3. We go break even after 1 to 1 is hit. And yeah, that's pretty much it, guys. Let me give you guys some examples and then I will end the video. All right, guys, so here is example number 1. I'm re-recording this example because for some reason the audio wasn't recorded, so here it is. So over here, look at these equal highs here. That is our draw on liquidity on the daily time frame, right? All I can say is that you have to identify your draw on liquidity, right? There are multiple ways, as I thought before. There's a power of 3 method, then there is external to internal method. Now over here, don't look at this candle, all right? We have the equal highs. So let me mark this out like that, right? We have this draw on liquidity here, actually just here, because this is the high, my bad. So what you can see is at 2, that's when the Asian session ends, right? So, and this is when the Asian session starts. This is the high, this is the low. Price broke the high. We have the 0.5 level. That's from where we're going to take our entry. So we go along here, put our stop right below this low, and we target the equal highs on the daily time frame. Literally that simple, guys. Find your draw on liquidity, find your expansion where the market is going, look at the higher time frames, look at the higher time frame order flow, and trade with that. So let's move on to another example. All right, everybody. So here is another example. So looking at Euro USD once again, and you can see that we had the Asian low here and the Asian high just around here. Now price broke out of the Asian high, giving us our intraday bias, and we look to take our entry from the 0.5 level of the Asian range, and you can see that it just went in like to the tick. It's so accurate, like it's insane. So we would go for 1 to 2, and if I go to the higher time frame just to speed this things up a bit, you will see that the take profit level was hit. And if you held this, you can see you could have gotten way too much, but that's not the rule of the strategy. Guys, I don't know how to explain this, but literally this is it. This is all you need. All right, you're gonna have losing months, you're gonna have losing weeks, but this is literally all you need. Let me give you guys one more example. All right, everybody, so here is the last example, and you can see that we marked out the Asian high and the Asian low. So I forgot, these are the indicators that I'm using. So for the Asian session range, type in FXN and you'll see this indicator by Rob Minty. And for fractals indicator, I'm using the fractals by Rachel T. So price broke below here and closed below the Asian low, and we have the 0.5 level here. Price goes up during the London session, and this would have been our entry, stop right above this high, and we could have gone for 1 to 2 just around here. So look at the precision in this strategy, guys. It's not going to work 100% of the time, but if you stick to it, if you go through losing weeks and months with this, in the long run, you're going to be profitable. I guarantee you. There's not a single strategy in the world that has a 80% or 90% win rate with 1 to 2 or 1 to 3 risk reward. If that would be the case, every single person would be a billionaire. All right. It's just about your mentality and how you approach the markets. So this is going to be it, guys. If you want to learn more, you can join my private course and private Discord. However, it's not necessary, but I'll try to get you funded within 3 months. I'll guide you. You will be talking to someone who is funded with 4 accounts currently, all proof on Instagram, no cap, and multiple payouts. Anyways, guys, thank you so much for watching. I'll see you guys next weekend, and happy holidays, and enjoy.